liquidity more available. From the standpoint of savings that is mobilized by the various planks of the financial system, because it is savings that is mobilized that becomes investments, that becomes liquidity in the capital market. We are also going to be engaging to see how very quickly interest rates can come down. Because as long as you have a very high interest rate regime, the capital formation process will be affected. But we are assured that the CBN governor has already given an indication that over time he expects that interest rates will come down. But we might be asking for a faster timetable on that issue, so that the kinds of liquidity that we like to see in the capital market, the kinds of liquidity that we like to see coming out of the entire savings mobilization process will lead to the issues around liquidity to be brought to the fore. It's also, I think the issues of liquidity will also be addressed by the new market platforms. Because a lot of the transactions that were done outside the Nigerian Stock Exchange platform are now going to be done on the over-the-counter platform. So we expect that before the end of the year, we're going to start seeing many PLCs being traded and their transactions being captured in the official market platform.
Let's talk about market makers. How well are they performing?
I think the market makers that have been put in place by the Nigerian Stock Exchange are already having some impact on the market. But I think there are a number of issues that the capital market will have to agree with the authorities at the central bank on. That will make for easier operation of the capital market. Before 2009, the process for capital formation was supported by the banking industry. Because of the problems of 2008, 2009, 2010, the banking industry withdrew considerably from a substantial part of the capital formation process. We'll have to work with the central bank to see how we can reopen opportunities for banks to support entrepreneurs from the capital formation standpoint.
The central bank has issued a draft guideline on the operation of the international money transfer market, and one of the objectives, according to the Apex Bank, is to provide a minimum standards and requirements for the international transfer services operation in Nigeria. What's your take on this?
This is the guideline that's come out by the Banking and Payments Department, Dipo Fatokon's department. We welcome it. In Nigeria, I welcome this guideline, and it's a very positive first step in bringing in a significant part of the money and payments business into a framework that is regulated and controlled in the financial sector. For example, at the moment, basically we're talking about the money brokers and the Bureau of Exchanges, the exchange offices, which fall outside of direct central bank regulation and the regulatory environment today. They're a significant portion of international payments in Nigeria, and it's essential that they fall within the regulatory environment. And I'll come on and give you an example in a minute. But at the moment, we've got a very well-regulated banking sector where the international payments, irrespective of currency, are regulated. And then behind that, as a key part of the payments business, however, you've got the money brokers and the exchange offices that are working with the banks. So for me as Deutsche Bank processing payments to or from Nigeria today, if those payments have come through a foreign exchange broker's office, I cannot tell, because we're getting them fed into us through a commercial bank. I can't necessarily tell who the initial customer is. But because of the regulatory environment, as I'm part of that payments flow, I'm obliged to know who the parties are. So bringing them in through this guideline paper will certainly bring in more transparency and more structure and framework into the payments business in Nigeria and then internationally.
If you look at institutions who operate in the industry that's in the money transfer market in Nigeria, how would you describe their level of performance, the level of involvement?
I'd rate them very highly. If we look at the Nigerian financial sector in the dollar payment environment, there are a significant number of Nigerian banks that are right up there along with very well recognized international banks in their payments processing. In fact, we have an annual award, Straight Through Processing Award, which is given to approximately 200 banks globally that have a processing level of 95% and more. And I can say that the winners of this award in Nigeria, and there are 3 of them this year, were at 98+% on their processing success. So it shows you that the technology, the staff, and the whole flow through from A to Z in the payments process, from the time the client makes the payment to the time the beneficiary receives that payment, the Nigerian banks know exactly what they're doing, and they're in there among the top in the world.
Are these financial institutions meeting up with international standards?
International standards, the benchmark is very high. We're in an environment today where regulation is extremely stringent. We've got, for example, the OFAC, which is the Office of Foreign Asset Control, that is monitoring and checking all of payments. Behind them are the sanction countries and the sanction lists. Now we've got FATCA, which is the foreign asset tax regulations that was introduced by Congress in 2010. These are all regulatory, and I'm only talking about the dollar. When we look at other currencies, we have the regulatory environment there too, but the dollar is the main currency, trading currency for Nigeria. These are all regulations that banks involved in the payment world have to be very, very familiar with and compliant with.
As at today, the Nigerian economy is not performing any radically different than what we had as expectation at the beginning of the year, then half year when we did a review, and even now after the 3rd quarter of the year. So the growth rate we expect will not be any different than what we saw last year, and that will put us at somewhere around 6% growth of the GDP. But again, we may not also see a departure from the development side to it, which means no radical improvement in development indices. Unemployment rate, of course, yes, inflation rate gone up a little bit and started coming down gradually. Even at that, at 8.1%, it is still a little bit high, even though single digit. Of course, interest rate is still hanging up there, significantly double digit. Then exchange rate is where the real problem is at the present moment. And that, of course, is informed by what is happening in the oil market internationally and the implication of that for our own economy, given the structure and the dependence we have on foreign earnings relating to oil.
Okay, what has really changed? Because you talked about the beginning of the year, we had projections, we had expectations, and
That's
now
right.
this is the 4th quarter, and to see there was a turnaround, so to speak, from what we thought would be by the end of the year. What do you think has changed?
Well, I would say in terms of what we can put our finger on as a change is the fact that, yes, we still have managed to maintain single-digit inflation rate, because we had expectation that that rate will possibly go up for 2 fundamental reasons. One is preparation for 2015 general elections, which naturally would mean spending a lot more. Then the other side also, of course, is the recent commitment of the government to infrastructure renewal. Now, there's no doubt that the government has been spending at least more than what we had in the last 2 years on infrastructure. So ordinarily, that would create expectation of inflationary pressures. But somehow, that has been curtailed and contained, but largely because, again, of course, because of the improvement in agri output, especially food items. So that has helped in a way to stabilize the rate of inflation somewhat. But again, there are other concerns because we expected, for example, that this year, with so much noise, quote unquote, and of course the expectation that there will be improvement in the employment situation, especially mouthing that over the years we've had growth without development. So the focus had been that, okay, this year perhaps we're going to have growth that is inclusive. But so far, there is still not any strong evidence that we created jobs in the numbers that will make meaningful departure from what we had up until end of 2013, and maybe I should even say up to half year 2014. So now compared to running towards the end of the year. So in that regard also, there's not been any significant improvement, okay? And of course, you can now pick on other development indices. Then again, you pick on perhaps the area of telecommunications. Some improvement there as well. Because looking at the beginning of the year, or let me say end of 2013, and where we are currently, how many active lines we have, and then access to internet, which of course has improved significantly. That is one of the major dimensions to infrastructure when you are looking at the economy of any nation. So yes, we've recorded some improvement in that area. But in some other critical infrastructure areas, power, for example, we haven't really done well. And that still remains a major drag on our economic performance and growing it inclusively.